Good morning. A technology rally spurred a rebound in US stocks on Thursday as a blowout outlook from an artificial intelligence bellwether revived hopes about the longevity of the bull market driver, while signs of economic strength lifted small cap stocks. At the close of trade on Wall Street, the Dow Jones index rose by 293 points or 0.6%, the S&P 500 index gained 18 points or 0.3%, and the Nasdaq index added 58 points or 0.2%. Small caps continued to outperform, with the Russell 2000 index beating the S&P 500 index for a 10th straight session, the longest streak since 1990, with the index currently up 0.9%. Buyers waded back into high-profile chip makers after Taiwan Semiconductor Manufacturing Company, or TSMC, Asia's most valuable company, assuaged concerns about the sustainability of current data center spending. The world's main producer of advanced AI chips, TSMC, predicted robust annual growth and flagged more US manufacturing capacity was in the works. TSMC said it expects expenditures of between 52 and 56 billion US dollars this year, up at least a quarter from 2025. It also foresees revenue growth of close to 30% in 2026, faster than the average analyst estimate. US listed shares of TSMC jumped 4.4%. Chip stocks such as Nvidia rose 2.1%, while Broadcom and Micron Technology gained 0.9% and 1% respectively. Chip-making tool companies Applied Materials and KLA gained 5.7% and 7.7% respectively, while Lam Research rose 4.2%. TSMC's earnings beat fueled a rally in memory chip stocks. SanDisk jumped 5.5% and Western Digital gained 3.3%. The Philadelphia Semiconductor Index closed up 1.8% and the broader S&P 500 technology sector rose 0.5% as investors went bargain hunting after the pullback in richly priced megacap and AI shares seen over the past couple of weeks. Goldman Sachs blew through expectations for equities trading revenue, posting an all-time Wall Street record of $4.31 billion US dollars in the fourth quarter. Goldman shares rose 4.6%. Morgan Stanley shares leapt 5.8% after the lender's debt bankers increased revenue 93% in the fourth quarter. The KBW Bank Index lifted 1.7%. BlackRock, the world's largest asset manager, gained 5.9% after a rally in markets lifted fee income and pushed its assets under management to a record of $14.04 trillion US dollars in the fourth quarter. Eli Lilly's 3.8% fall dragged the healthcare sector down 0.6% among the worst performers on the S&P 500 index. Shares of the weight loss drug maker fell after Reuters reported that a US Food and Drug Administration decision on its obesity pool would be delayed until April 10. Boston Scientific announced that it reached an agreement to buy medtech company Penumbra in a $14.5 billion US dollar cash and stock deal. Penumbra shares soared 11.8% and Boston Scientific lost 4%. Spotify also fell 4% after the audio streaming giant said it would raise its subscription price in the US to $12.99 per month from $11.99. US government bond yields were higher on Thursday after a flurry of US economic data came in stronger than expected, slightly denting expectations the US Federal Reserve will cut interest rates in the near term. Bonds fell as data showed a resilient US labour market, with jobless claims unexpectedly sliding to the lowest level since November. The Labour Department said weekly initial jobless claims fell by 9,000 to a seasonally adjusted 198,000, below expectations of economists for 215,000 claims. The US import prices increased 0.4% over the 2 months from September to November. Import prices edged up 0.1% in the 12 months through November. Imported fuel prices fell 2.5% over the 2-month period ended November. In addition, reports on manufacturing in New York State and the Mid-Atlantic region for January from the regional Federal Reserve banks were stronger than expected. Chicago Federal Reserve President Austin Goolsbee said the US central bank should be focused on getting inflation down as there is ample evidence of job market stability. Expectations for a rate cut by the Fed at its late January meeting stand at just 5%, while markets are currently pricing in a 21.6% chance for a cut of at least 25 basis points at its March meeting. The US 10-year Treasury yield rose by 3 points to 4.17%, and the US 2-year Treasury yield increased by 5 points to 3.57%. European shares scaled a new record high on Thursday, boosted by technology and financial stocks. The continent-wide FTSE Euro First 300 index advanced 0.4%, technology stocks gained 2.3% and hovered at levels last seen in the year 2000, while financial services jumped 2.2%. Top chip equipment maker ASML shares soared 11.2% to a record and surpassed the $500 billion market value mark after strong earnings from TSMC buoyed sentiment across the semiconductor industry. Financials were boosted by strong updates from British money manager Schroders and Swiss private equity firm Partners Group. Schroders jumped 9.8% after it said improved fees would help annual profits surpass estimates, while Partners Group rose 7.6% following a disclosure that it had received $30 billion in new assets last year. In London, the blue chip FTSE 100 index was also up 0.5%, hitting a fresh record high as the UK economy grew 0.3% in November, its fastest pace since June, helped by Jaguar Land Rover's return to full production after a cyber attack. On commodity markets, global oil prices settled down around 4% on Thursday, ending a 5-day streak of gains after US President Donald Trump said the crackdown on protesters in Iran was easing, allaying concerns over potential military action against Iran and oil supply disruptions. The Brent crude price fell 4.1% to $63.76 a barrel, and the US NYMEX crude price shed 4.6% to $59.19 a barrel. The gold futures price fell 0.3% to $4,623.70 an ounce, as lower than expected US weekly jobless claims data boosted the US dollar, while US President Donald Trump's moderated tone on Iran further weighed on safe haven demand for the metal. Gold futures dipped 1% from a record high on a stronger US dollar and easing concerns over the potential imposition of US tariffs on the metal. Iron ore futures slipped 0.3% to $107.39 a tonne on Thursday as hot metal output fell in top buyer China amid a slow resumption of production after the New Year holiday. The Australian share market looks set to ease on Friday despite a good session in the United States. According to the latest SPI futures, the ASX 200 is expected to snap a 4-day winning streak and is expected to open 13 points or 0.1% lower this morning. The ASX 200 index has clocked gains for 4 consecutive sessions this week and is at a 2-month high, with mining shares posting 3 successive record closes. There's little in the way of economic data or scheduled company announcements in Australia on Friday. Overseas arrivals and departures data is scheduled from the Bureau of Statistics. In the US, manufacturing production likely dipped 0.1% in December. Still, increased output of electricity from utilities likely helped to support headline industrial production, which is forecast to edge 0.1% higher on Friday. US home builder confidence is likely to have improved at the beginning of 2026, with future sales expectations remaining above the key break-even level of 50 for the past 3 months. The NAHB Housing Market Index is expected to inch up to 40 points in January from 39 points in December. Pittsburgh-based PNC Financial is expected to report a jump in fourth quarter profit on the back of higher interest income and fee income strength on Friday. The US dollar reached a 6-week high on Thursday after data showed that the number of Americans filing new applications for unemployment benefits unexpectedly fell last week, further boosting expectations the US Federal Reserve will keep rates on hold for the next several months. The Aussie dollar rose from 66.74 US cents to 67.08 US cents and was near 66.95 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day and a wonderful weekend.